What is up, everyone? The Cash Flow Cowboy, you know it, Justin Warziniak. Today, we're gonna dive a little deeper into our buying criteria and we're gonna talk about unit size. So I'm talking residential and commercial multifamily. Stay tuned. When I'm talking residential multifamily, I'm talking 2 to 4 units. So that's duplex, triplex, and quadplex. So one of the pros of residential multifamily is that it's less intimidating. Mentally, if you think about it, it's smaller. It's a lot easier to wrap your head around, especially when you're first getting started in multifamily as an investor. And if you look at it as a mistake, if you're bound to make mistakes. I make them. Everybody makes mistakes. So if you do make them on the, a quadplex or a duplex, it's a lot smaller of a mistake and it's easier to manage. The lending on residential multifamily is way more favorable as well, especially if you want to house hack. So if you want to live in one of the units and rent out the other units, because then you get lower interest rates. If you're living there, it's a lower down payment. You can do 3.5% down. Like, that's ridiculously low. Usually a commercial property is 20% down. So you can see the difference on just simply the down payment. Also, the personal loans tend to have better kind of terms as well. So you can amortize them longer, 30-year amortized, which is, it's a good thing to do because it spreads out the mortgage payment over a longer period of time. So then you have more cash flow each month. Typically on the smaller multifamily as well, you will see a lot more joint ventures, so JV situations. So like if it's a quadplex or something like that, you can just grab, yourself, maybe a partner or two, a couple buddies or something, and take that thing down because it's not gonna be as expensive. Once you start getting in the larger commercial multifamily, that's when it's totally different and you're bringing in investor money to take down those deals. One of the biggest disadvantages though of the residential market is, there's a lot more competition. A lot of people can buy, smaller multifamily. It's easier because like we said earlier, it's less intimidating. So if you have more competition, it's just gonna be harder to snag a good deal. Another disadvantage is the fact that Fannie Mae, Freddie Mac, they limit the amount of loans that they'll give you. So you can only have 10 mortgages out. That's usually roughly around there. Usually, even if you're getting close to that, most banks won't even finance it. So if you think about it, if you can only do 10 mortgages, you can only really do 10 properties, and that's not great economies of scale. So you want to be able to do a lot of loans, a lot more stuff, and that's what you'll get in the larger properties. Lastly, one of the negatives is, if it's a smaller building, property management on that usually doesn't make as much sense. So a lot of times you end up self-managing just to, cut costs just so the deal works. Well, that's not great because that doesn't scale very well. You can't just keep managing a bunch of properties if you want to be a real deal investor and scale to more and more and more. You don't have enough time for that. And that's why it's important to grab property management and transition into the larger multifamily. Now, when you guys start getting into the bigger commercial properties, so the larger multifamily, we're talking like 5 units plus, the loan structure starts to change a little bit. And also a big thing is the value of the property. So the value of this gorgeous multifamily property, it's not based off your neighbors anymore. It's not based off comparative values in the area. No, even better, it's based off of your NOI, your net operating income. So if you run the property well, you drive up the income and you lower the expenses, well, your net operating income is much larger. Therefore, you can boost the value of your property significantly. Another big difference you're gonna see in the commercial multifamily, so those 5 units and up, that you're not gonna see in the residential multifamily, is that you're probably gonna have to pool investor money to purchase these larger assets. I mean, they're millions and millions of dollars, which a lot of times you can't just do with a partnership structure. You need other investors. And that's when you'll hear the buzz phrase syndication. And that pretty much just means, you have a partnership, the general partnership that's running the deal. And then you got a bunch of limited partners that are investing in the deal. Another great pro of owning large apartment buildings, so large commercial multifamily, is that you get to leverage economies of scale. So this works in a couple of ways. If you think about it on the renter side or the income side, if one of your tenants move out when you have a duplex, that's half your income gone. Bam, just totally gone. If a couple tenants move out and you own a 100-unit apartment building, not as significant. So that's one of the reasons why economies of scale is so important when you have a lot more units. Economy of scale also plays into the acquisition process. So if you think about it as from point A to point B, from finding a property to closing on a property, with a quadplex or a duplex, you're offer negotiation, then you're doing due diligence, and then you're ultimately closing. Well, the same process applies to a 100-unit apartment building, except it's going to be a little bit more involved. There's going to be more lease audits because there's 100 tenants versus 2 or 4. But ultimately, that little bit of work up front, that difference, correlates to a much larger economy of scale difference once you start getting the cash flows from 100 units versus just 4. So bigger is better, and there you go, more bang for your buck, more bang for your time as well. Another great thing on the larger complexes is when we want to talk about property management. So the bigger it is, the more likely you're going to, first of all, have a property manager, a third-party property manager running the day-to-day operations. So think about that. If you're an investor, you don't have to self-manage this anymore. All you have to do is turn it over to a property manager. They run it how you would want it run. They meet the business plan, and you just collect the paycheck in the mailbox money. The other thing is, once you get to a certain size of units, then you bring that property management. You usually bring a property manager on site, which is great because then it just makes things way more efficient. They're only worried about your complex, not someone else's, and they're making sure it's optimized and bringing in as much income as possible. In the multifamily space, size matters. Hope you liked the video. Like, subscribe, share. Till next time, Cowboy out.